Welcome back to Alpha Recap, your quick markets after close rundown from stockalpha.ai. Today we're unpacking a tape driven more by policy and capital allocation headlines than one big macro shock. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed mixed today. We saw gains in energy, materials, and industrials, while technology, communications, and crypto ran into headwinds. That split, that bifurcation, is really the story of the day.
Totally. Let's start with the winners. Energy and materials led the charge. Think renewables buildouts, grid-scale storage approvals, and critical minerals deals. Big international cooperation on offshore wind and a major pumped storage approval set a constructive tone.
Right. The North Sea Nine-Nation Wind Pact and a FERC approval for a 1.2 gigawatt pumped storage project were the headlines. Those aren't just policy soundbites. They're project pipelines that create multi-year demand for turbines, batteries, and the rare earths and battery metals that go into them.
Put simply, when governments and regulators give the green light on massive projects, developers need parts, miners need to ramp exploration, and industrial suppliers win work. That's why materials and mining names reacted well today. Deal activity like the Energy Fuels tie-up with ASM is a tangible example.
Exactly. And industrials got a boost too. Onshoring and big capital commitments showed up in the headlines. Remember Roche's $2 billion expansion in North Carolina and Micron's $1.8 billion purchase of a fab in Taiwan. Plus, GE reported a 74% increase in fourth-quarter orders, which is huge for equipment demand.
74% in orders is the kind of number that changes the conversation for industrials. It points to stronger defense and energy infrastructure spending and suggests a potential multi-quarter tailwind for heavy equipment manufacturers.
Meanwhile, real estate had pockets of strength: senior housing, retail corridor sales, and financing for affordable housing. Record gains in senior home equity and active financing pipelines were supportive for certain REIT strategies.
So that's the constructive side. But it wasn't all sunshine. Tech and communications ran into regulatory and legal overhangs. We saw a flurry of DOJ probes, patent fights, and intense scrutiny of a reported $83 billion proposed tie-up between two big media players.
A lot of that creates timeline uncertainty. When you have enforcement actions or big merger reviews, deal synergies get delayed and legal costs pile up. For investors, that can compress multiples and increase downside risk if outcomes are adverse.
Crypto was a mixed bag. There were regulatory wins and more ETF listings supporting the space, but that was offset by a steep post-IPO slide at a major custody provider and net ETF outflows. The result was elevated volatility and fragile investor sentiment.
That's a perfect summary. Productization, like spot ETFs, is happening, and infrastructure is improving. But if a custody player stumbles after an initial public offering, it shakes confidence in the plumbing of the market, which can lead to outflows even when product availability is expanding.
Let's explain the renewables to minerals to industrials chain in plain English. Governments approve big wind and storage projects. Developers then sign long-term contracts to build them. Those projects need metals and components, so miners and recyclers get more business. And finally, contractors and heavy equipment makers get the orders to build it all. It's a supply chain domino effect.
Nicely put. And one concrete example today was the Energy Fuels ASM tie-up, which signals consolidation in critical mineral supply chains. Those kinds of deals are essentially hedges against future supply constraints for the energy transition.
Policy was a big mover across multiple sectors. From state-level cannabis sales, Minnesota posted about $31 million in early adult use sales, to telecom and media merger scrutiny, and even auto bank approvals from the FDIC, policy headlines rerouted capital.
Speaking of the FDIC, conditional approvals for Ford and GM to form banks is a structural development. When automakers own financing arms, they can change the economics of auto loans, which could pressure traditional auto lenders and some regional banks over time.
That's a good point. What investors should watch there is originations, asset-backed issuance, and dealer relationships. Those dynamics will tell us whether captive auto banks are grabbing share or simply reshaping the market slowly.
AI kept popping up as a cross-cutting theme too. Retailers and luxury brands are using AI for personalization. Healthcare is deploying it for diagnostics and research, and fintech and defense budgets are pulling tech dollars in different directions. But regulators and liability concerns are tempering some of the enthusiasm.
So, What did today mean for investors? We boiled it down to actionable ideas. First, tilt toward energy and materials tied to the energy transition. Favor developers with secured offtakes and materials players with upstream exposure to battery metals.
Second, position selectively in industrials, where onshoring and capex drive durable earnings upside. Look for companies with diversified end markets and strong execution, and avoid those with single-point supply risks or heavy refinancing needs.
Third, favor pockets of real estate with stable cash flows, senior housing, selective retail corridors, and affordable housing, but emphasize operators with solid balance sheets and occupancy trends.
Fourth, be cautious in tech and communications until regulatory outcomes clear. If you're concentrated in large-cap names facing probes or merger scrutiny, consider hedging or shifting some exposure to niche tech companies with less antitrust risk.
Fifth, if you want crypto exposure, be selective. Prefer liquid, diversified products like spot ETFs where available, focus on custody counterparty strength, and keep position sizes modest. Volatility is still high.
And sixth, watch banking for structural shifts. The new auto banks could reshape deposit and lending dynamics for regional banks, so monitor credit quality and deposit flows closely.
Let's call out the biggest single-day moves that mattered. GE's 74% jump in orders was a loud signal. The FERC pumped storage approval and the North Sea Wind Pact were big for project pipelines. Micron's $1.8 billion fab purchase and Roche's $2 billion expansion underscored ongoing manufacturing investment.
And don't forget the $83 billion reported media tie-up under scrutiny and the Minnesota cannabis sales figure as a reminder that policy can re-rate whole groups quickly. On crypto, ETF wins plus custody weakness made flows and counterparty stability the two numbers to watch next.
Risk factors that could flip today's view include a sudden policy shock like federal cannabis rescheduling, big regulatory enforcement in tech, a major move in interest rates or credit spreads, or a sharp commodity price swing that changes project economics.
Looking ahead, keep an eye on regulatory calendars, DOJ filings, FERC rulings, and FTC reviews, as those will control the timeline for many big stories. Also watch project financing announcements for large storage and offshore wind projects. Those are the green lights that move pipelines from planning to construction.
And corporate updates matter too. If GE's order momentum continues in next quarter updates, that validates the industrial story. If net ETF flows into crypto reverse meaningfully, that could stabilize sentiment there.
So, final takeaways. 1. Markets closed with a clear bifurcation. Policy-backed growth in energy, materials and industrials versus headline-driven risk in tech, communications, and crypto. 2. Favor names with contractual revenue, balance sheet strength, and explicit exposure to structural trends like electrification and onshoring. 3. For sectors sensitive to regulatory outcomes, raise your bar on due diligence and position sizing.
That wraps it up nicely. Thanks for listening. We'll keep tracking the agency rulings, financing announcements, and order books that will determine whether today's rotation becomes long-lasting.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next time.